Well, crypto moving into a new phase of integration with the financial system, 2025 marked a turning point with clearer rules, renewed institutional participation, and also a thaw in capital markets activity. And as we kick off a new year, digital assets are moving deeper into payments, market infrastructure, and also global commerce. Institutional adoption is also accelerating. Stablecoins are increasingly being used for payments, treasury operations, and cross-border transactions. NBC conditions also appear more supportive with growing interest in late-stage and institutional-grade crypto companies as demand shifts towards more sophisticated products and services. Well, joining me live at the New York Stock Exchange to break down the themes expected to define crypto this year is Anthony Vassallo, Senior VP of Crypto at Silicon Valley Bank. Anthony, Happy New Year. Thank you so much for joining me.
Good to see you, Remy.
Well, first and foremost, let's start out by talking about evolution and what we've been seeing when it comes to VC's role in funding crypto innovation.
Yeah, if 2025 was the year that crypto came back to the mainstream, 2026 is the year that's all about infrastructure. So there was a valuation overhang across VC, but in crypto as well from 2022. And we've seen bigger checks go into fewer winners, totaling just shy of $8 billion. And the segments are more clear. So rather than speculation and point solutions, it's more about platforms and what can be built to actually empower and rewire finance. So consolidation into more proven teams and a few segments, which I'm sure we'll get into.
And as we head into 2026, we're keeping a close eye on M&A when it comes to crypto. So can you tell us what's actually driving this and how it's also changing the market?
Yeah, so VC is at a record level, but why build when you can buy? That demand is outstripping supply. So corporate venture capital firms are as active as they've ever been, but the corp dev teams have a growing shopping list. They want to go to market soon. So seeing some pretty landmark announcements from financial institutions and crypto companies around new products, partnerships, and they want to vertically integrate and offer a real stack. So you saw last year, for example, Coinbase bought derivative exchange Deribit for $2.9 billion. Kraken bought NinjaTrader for $1.5 billion. Watch this year to see not only that total deal count go higher, but perhaps the biggest deal that we've seen in crypto as well.
And as we look at the year ahead, this is the time of year that we're looking at key trends as well as predictions. So given the expectation out there, what do you expect to see when it comes to stablecoins as well as RWAs and also the role of artificial intelligence?
Yeah, where we consolidated in our annual outlook was 5 themes. So one is institutional capital up and to the right alongside M&A, and stablecoins actually becoming more usable and trending toward the internet's dollar. Stablecoins offer a tokenized fiat, programmable compliance, and get to move your cash around the clock and at the speed of the internet. So why settle for T+2 when you can settle for 5 seconds, potentially, right? And then you're also seeing a lot of announcements around tokenized deposits, allowing banks to settle more quickly, either among themselves or within themselves. RWA, another record year. If we think about the promise of a blockchain is to show that a digital object was in one place at one time with a single owner. So you saw a lot of that, especially with financial instruments, money market funds. And if you want to count prediction markets as RWA, I don't think there's anything more real than betting. But that had a record year as well. We would expect larger volumes, and it appears that prediction markets are the biggest app in crypto since NFTs. And finally, with AI, I always come back to a rhetorical, does crypto need AI more than AI needs crypto? And if you think about centralization, censorship, sharing private data, and provenance, there's a lot that decentralized technology can bring to AI, and the VC is following there as well.
Yeah, and before we move away from this, can you tell us a little bit more about prediction markets and where you think it actually belongs?
What do I think what?
It actually belongs.
Where I think AI actually belongs?
Prediction markets.
Oh, prediction markets. I think I think a lot of that is to be seen. I think the market should decide. I know that might sound like a bit of a cop-out, but I think you need regulation, and there's a lot of places where traditional instruments are good enough. But really it's a great forecasting tool when you look at where people are placing their capital in aggregate. But if you see how it's complementing existing systems, that's really interesting. So rather than buying a stock or an option, betting on something discussed or on an earnings call or how the stock will trade. And as well, the centralized players, for the most part, do a great job, but they're also looking to embrace the technology as well.
And finally, Anthony, before I let you go, I do want to ask you about what you're seeing in the data when it comes to institutional adoption, especially with crypto and blockchain compared to a year and a half ago. Where are we right now?
If I think back to 18 months ago, FIs were saying, should we touch this, or just let's not touch this, period. And now it's how do we integrate it and what do we want to do? How does it improve the customer experience? So payments is an obvious one, enabling cross-border. And what we're seeing our clients do is use it as their treasury. And we're seeing FIs do at large is really move from pilots to enterprise plumbing. So rather than what can this do to true production.
Well, Anthony, great having you here at the New York Stock Exchange. Another bustling and busy day on the trading floor today. So appreciate your time and all of your insights.
Thanks for having me.
Thank you.